What's up, everybody? Welcome to the Stocks channel. Happy New Year to each and every one of you, and I'm officially back to the normal schedule, so expect to see those daily updates each and every night. Now, I did publish my 2024 prediction, which includes a lot of very in-depth technical analysis of what I expect for the indices this year, and that is now in the Stocks channel Discord members only section. So if you want access to that analysis and each and every monthly members only video, you simply just need to join the Stocks channel Discord server. On top of that, 2024 is going to be a great year for traders. I'm expecting a lot of volatility and a lot of sideways movement, which is great for traders. So if you want to crush this market, also consider joining Bank Trade Alerts, where you will get all of your buy and sell alerts for the ETFs TQQQ and SQQQ via text message and email. So if you want to come crush the market with us, we would love to have you. All right. The first technical analysis of 2024 has definitely not been without any excitement, as we are starting to pull back very early in the year. And looking at SPY, we are already testing a very critical support zone, which is our rising 20 daily moving average and support zone between 467 and 468. Now, as I've said many times, this is a bull trend until it's not. And if this is a bull trend until it's not, that means this would be a very valid support zone for SPY to start to bounce, because we are at a horizontal support zone as well as a rising dynamic support from that 20 daily moving average. So it would be a very textbook bull trend if we found support here, found buyers, and continued to bounce towards that previous all-time high zone right up there around 480. Now, if we break down below this support zone, that is obviously bearish. And if we break down below the support at 468 to 467, then we will be looking for a trip back down towards 462 and then 458. As you can tell, 458 is also where that rising 50 EMA is, so that will be a very important support zone if we cannot hold the current support zone that we're testing now. So this is a very simple trade plan. Whether or not we can hold this support or break down below it will tell you whether or not you should be waiting to buy at lower prices or shorting the market, or getting ready to get low risk long entries right here at support as we continue to bounce. Do keep in mind the Nasdaq 100 and the Dow Jones did make brand new all-time highs last year, even though the S&P 500 did not. So do not rule out the possibility, which is the highest likelihood chance, that during this bull trend we're going to find support and continue to push higher. If we start to bounce, you want to look for resistance right around 475, 478, and that level right around 480. On the Nasdaq 100 triple Qs, we were down 1.06% today, and the triple Qs gapped down yesterday, so we do have an open gap up there right around 408. And today we did fill an open gap that we had from last year, which was right there below 399. So with this gap filled, then just like I said on SPY, with a textbook bull trend, it is very possible we start to bounce immediately now that we filled this lower gap. And if we start to bounce immediately, we'll be looking for resistance right around 404 and this gap fill just below 408. If we continue to push through that gap, it's possible we make another attempt at a brand new all-time high, which is going to require a break above 411.50. And if we break that resistance, we will likely hit this price target up here at 414. Now, in the event we cannot hold this support zone at the gap fill between 396 and 398, then we will be looking for a trip back down to retest this breakout, which is also the 50 EMA right around 390 to 391. So these are very obvious risk levels, and they're going to be very simple to trade from, because if you're bullish, you're looking for low risk long entries, and if you're bearish, you're going to be looking to short if we cannot hold these support zones until we get to the next support zone lower. So as I always say, it doesn't matter how you're trading, just manage your risk around these critical levels. And these levels on SPY and the triple Qs are without a doubt very critical and going to tell us whether we're going to bounce and continue the bull trend or start to break down and get a further correction. On the Dow Jones, we were down 0.76% today, and the Dow Jones is breaking down below the 5 EMA after a rejection from that resistance between 376 and 377. If we continue lower, we're looking for support at the rising 20 daily moving average and support zone between 371 and 370. And then below that, we test a support zone right around 368. And if we can't hold that, we come back down towards 360. Now, if we break out and we can break above 377, we're looking for a push towards 380 and then 383. On the Russell 2000 IWM ETF, we were down 2.67% today, and the small caps also gapped down, so we are going to have a gap up here below 199, and we are very close to closing a gap to the downside, which is right around 193.64. So if we go a little bit lower and fill this gap, it is going to be possible that that gap fill is support, and then we start to bounce up towards 198 to 199 to fill the gap above. Now also pay attention, we are still in a bull trend and we're sitting right below a rising 20 daily moving average. So if we find support and start to bounce immediately, we could maintain this bull trend and still push higher towards 207 to 208. If we break down below the gap fill and can't find support there, you're looking for support right around 191 and then 186. On the ARKK ETF, we were down 3.92% today, and ARKK broke down below the 20 daily moving average and we did gap down, so we have another gap to fill to the upside at 50.2. And if we continue any lower and lose support at 48, then we'll be looking for a support zone right around 47 and 45.7. To the upside, we need to break through that resistance just below 51, and if we can do that, we have another gap to fill right around 52.3. On the VIX, we were up 6.21% today as the VIX is starting to spike towards that price target up there right around 15. And as I said before, during a pullback, we could easily see the VIX get to 15 to 16 and possibly even 18. And we could still maintain a bull trend as long as we just get a normal everyday pullback. If things go from bad to worse, we should see it in the VIX, and we should see the VIX spiking out above 20 as we see fear picking up. On Bitcoin, we're currently down nearly 5% as Bitcoin is rejecting from that price target right around 44,600, and from there we got a very impulsive high volume sell-off all the way back down to the 50 EMA of support just below 41,000. This is still a very tight trading range between 40,000 and 45,000, and it's really not going to give us a clear direction on where Bitcoin is going to go until we break out of this range decisively. You can see we had a false breakout to the top side of the range at 45,000, and then we're all the way back down to the bottom of the range at 40,000. Below 40,000, we're looking for the next support at 38,000, and if we can break out above the resistance at 45,000, it's possible we run higher towards 47,500. On Nvidia stock, we were down 1.24% today, and Nvidia is rejecting from that previous high that I told you would likely be a range-bound resistance, and I did not expect to break just yet, and that was that level right around 504. You can see that we're back down towards support at 475, and I do believe this will be an important support because if this breaks, we could see a double top rejection and go down towards this gap fill below 424. So if you want to be bullish on Nvidia, you want to watch the support very closely at 475, and if we bounce from here, that could be a risk level for another attempt to break out at 504. If we break below 475, that's going to be bearish, and it means we should go down to at least 454. On Tesla stock, we were down 4% today, and Tesla looks like it's breaking that support zone at 244, and I told you if it did break down below support, it was likely that we would come down here and fill this gap down here right around 225. So in order to make that more clear, I'll go ahead and move this arrow over, and I'll delete the arrow to the upside because price action is telling us that we're breaking down, and if we're breaking down below 244, we want to watch the support zone at 230 and the gap fill at 225. If price can break back above 244 and we can hold that level as support, then we'll be looking for a push back higher towards 255. On Apple stock, we were down 0.75% today, and we did gap down yesterday, so we have another gap to the upside just below 192, and yesterday we also did fill the gap right here at 186, and I told you we were going to fill that gap if we could not hold this support right here at 190, and clearly we gapped down below it, so it was an easy push for the bears to go down lower. Now, one thing I want to show you on Apple stock is that we are now 2 days below the lower Bollinger Band, so we're getting extremely oversold, and we do have this gap to fill to the upside. So I do believe that as long as Apple can hold this support zone between 180 and 182, there's a very good chance Apple is going to try to fill that gap to the upside right around 191.73. Now you also have to respect the fact that we did break down below 190, so that's also going to be a resistance level. But from here, if we can hold support between 182 and down here right around 180, that could be a strong support zone for us to get a lower high bounce before we continue any lower or continue a bull trend. So jumping back over to the S&P 500, this is a very important test for the bull trend in SPY because we are at the rising 20 daily moving average within a very powerful bull trend, and we have not yet broken down through any critical support levels. This could just be a very typical pullback down towards support before we continue higher towards all-time highs. And if we do roll over and lose the bull trend, we're going to see it in the price action by breaking down below this critical support at 467. So as I always tell you, be prepared for either of these scenarios because we couldn't care less which scenario plays out. We simply want to be on the right side of the trade and manage our risk. Get in the habit of having a very solid trade plan. That way, when you're following the price action, you're simply reacting to price and not any bias. And as I always remind you, be sure your trade plan has solid risk and reward ratios so that you can properly manage your risk and stay profitable. This is the key to being a profitable trader and being a successful trader. So hammer home the point that you need to manage your risk and always have a solid trade plan prepared for either scenario, and you are absolutely going to crush the market in 2024. 2024 is going to be a great trading year, and I'm very confident we are going to have very solid trades across the board. And I'm very confident that if you do not have a trade plan, this is going to be a market year that is going to frustrate you, and you are likely going to suffer losses if you do not start to make a trade plan and plan ahead right now. So as I said in the introduction, the members only videos for the stock channel is now out, which gives you a very clear idea of what I expect for the market movements moving ahead with very clear, well-defined risk levels. And you can also join Bank Trade Alerts, where you'll get all of your buy and sell alerts directly via email and text message for the TQQQs and the SQQQs. We are going to absolutely crush the market in 2024, so I would love to have you come join us and crush the market with us. So happy new year, everybody. I hope you have a very successful trading year. So thank you for watching, and as always, I will see you in the next episode.